Hello and welcome to this next training session on the Department of Labor's Prohibited Transaction Exemption 2020-02. Today we're going to cover some common rollover case studies and discuss the disclosure letters that clients will begin receiving beginning on February 3rd. The four most common rollovers we've seen thus far, and what we're going to go through today, are divided into these four buckets: the IRA self-directed to BSW managed IRA, the IRA managed by a contra advisor transferring to BSW, a client changing jobs and needs to have their 401k rolled over to BSW, and then this last bucket we'll talk about the unsolicited decision and how that might impact the workflows you see in Salesforce. So let's go ahead and jump in. Like I said, first case, an example we're going to walk through is an instance where there's a new prospect that has an IRA that is self-directed and has approached Buckingham about managing that asset. And so just again, a sample prospect background here you can see on the screen. Again, up until this time, the couple has been self-managing or self-directing these accounts, but now has found that they need a full-time advisor as they look to transition these accounts. And so there is one spouse that has an IRA, and that spouse has told us that they need help figuring out what options they have related to that account. So again, we put on our hat of, hey, now we are recommending and providing an analysis, which the PTE conditions will apply. So let's walk through what this, again, example might look like. So because the clients have self-managed up until now, fees are very low, right? They're at a custodian like a Vanguard, where management fees, trading fees, expenses related to that account are very low on an annual basis. We just came up with $250 on an annual basis for this example. The IRA in question has a balance of $100,000. And again, based on sort of the current portfolio value overall, they would be sort of on our normal 1% or 100 BIP fee schedule. And again, we need to do an apples to apples comparison of their current IRA account and what's being charged and what that actual account at Buckingham would be charged. And so we're not looking to show the full management fee, again, that full $6,000, but rather what portion of the IRA will make up that fee. And so we've broken that down in a simple example. They'll be charged $1,000 for management of that account, all things considered at Buckingham. In this option of IRA to IRA rollover, more often than not, especially in the self-directed realm, the fees at Buckingham are going to be more, and that's okay. And I think that's maybe a point of emphasis here, that we actually know that that's going to be the case, and that's normal, right? They're coming to work with Buckingham for other parts of our value proposition, and we'll talk about that as we go through. But I don't want folks to be tripped up or avoid situations where, hey, just because cost and fees we're going to lose here doesn't mean that a transaction can actually be in the client's best interest. And we'll walk through in this example why that can actually be the case. So even while fees are higher, we'll go to services and features next to kind of break this down. And so in this instance, we decided that the prospect had access previously to a self-directed brokerage account. And so as you work through the Salesforce workflow or have the worksheet up and reference guide, you'll have to check that box and have a quick description why we may be offered to offer a suitable alternative rolling over to BSW. So we came up with some sample language here. I mentioned where we sort of make up for those increased fees. And in this example, it's paramount on the screen here. These are the services that are unique and special to Buckingham that the client doesn't currently have, right? They're self-managing, so they really have no ability to get full financial planning and wealth management services, or periodic meetings to discuss their financial situation, or the capability to manage non-nutritional assets. We listed a number of options here on the screen, which leads us to be able to pretty easily check the box, yes, that this decision is indeed a more customized offering and in the client's best interest to transition over. So we've talked about bucket one with fees, bucket two with planned services. Now thinking about investment options. Again, currently where the client's at, they had sort of limited investment options based on where they were currently at with their custodian. We were able to glean some of that in this example from looking at the custodian statement for the client and his discussions with the prospect. And so we are able to check the boxes, again, greater selection of funds. They now have access to Buckingham's intellectual capital by way of our fixed income desk, our IPC, also access to alternative investments that they didn't have before, again, leading to a yes answer here that we have a more customized offering. In this instance, again, we use the custodian statement from the prospect to provide for our analysis with some additional discussions as well. From here, when and if that case is submitted in Salesforce, a client disclosure letter is then queued up and sent to the client directly out of Salesforce. So this functionality is new and being turned on and effective as of February 3rd, 2022. It's imperative that advisors are filling out those previous fields accurately. And we'll talk about that why here in a second. But again, as soon as that case is closed in Salesforce, the logistics are we take the email address from the prospect of the client and spin up an email that has this letter appended to it. So that they'll automatically get, it'll have the client or the prospect's information all populated. I mentioned it's important and really critical that advisors are filling this out accurately, because what we're doing on the back end is actually taking your responses. If you remember, we talked about fees. We're going to pull that data in here and talk about the fee analysis. We're going to do the same thing with services and features, right? Where is Buckingham providing value that wasn't there before? We're going to pull in all of those items that an advisor checked. And then similarly with investment options, we're going to talk about all of those things that are now available to a client under bullet point 3 here. So it's, again, very important that you are taking this seriously and filling these out accurately, because it could lead to an inaccurate or a jumbled letter if we're not taking our time and filling out those workflows in an important way. So I just wanted to point that out and point out some of the logistics of the workflow itself. This letter serves as a number of sort of important disclosures that we need to satisfy under this rule. Talks about our fiduciary acknowledgements, talks about how we're complying with the PTE, and then, like I said, ultimately breaks down an analysis and determination of why we believe this rollover is in the client's best interest. So that's case number 1, the IRA to IRA transfer, which if you've listened to any other training sessions we're doing, does indeed fit in the DOL's new definition of what's considered a rollover or a transfer of retirement assets. Now pivoting to example case number 2, a situation where a prospect is coming to us. They do have an IRA that's actually managed by another advisor, and they're looking to transition all of their accounts over to Buckingham. So again, came up with a sample background here of a couple with about 1.4 million in investable assets. They were previously with a broker dealer who's now looking to transition to a fiduciary type advisor like Buckingham. Both spouses do have IRAs that they're looking to transition over. And we were able to get information about the client's fees after just talking to the prospect as well here. Point of emphasis here, I know that's not always an easy conversation. And after bouncing that off with advisors, certainly that we're not asking you that you need to go after what someone's current fee schedule is at their old advisor or at their previous advisor where they're at, and if they're searching. There's other ways to find that, but that's going to be maybe the most direct way to come up with a fee or cost analysis in the IRA realm, simply because that's likely not going to be listed on a custodian statement. And so if we're trying to find a fee comparison, that may be the most direct way to do it, but also want to be sensitive to fee compression and fee analysis and where our fees may stack up, whether that's higher or lower. And just want to say that that's not required, but maybe a way to get that information. For this example, it is important that for every IRA that's being transferred in, a separate and distinct best interest analysis needs to be performed. So in this case, both spouses have an IRA. We will need to perform 2 different reports and pull 2 different types of documentation for each of those accounts. So marching through this, much like we did before, turned out that one of the spouses had an IRA with about $75,000 in it. had some relatively high expense ratios, and the management fee was higher than what Buckingham's going to be. So you can see we actually came in a little bit lower on the BSW side of fees of what this could look like for this account moving forward. We'd fill that out on the worksheet or within Salesforce and where we found those resources. Next, we talk about services and features. As before, this prospect likely didn't have the full suite of wealth management and financial planning services that Buckingham may be able to offer, that their prior broker dealer or advisor was not able to offer. They also have the ability now and have a greater transparency of both fund holdings and increased fee transparency in this example. So we check those boxes and then click yes for features that are now customized at BSW. Moving through to investment options, again, most of the time, if not all of the time, when and if a prospect is converting over and bringing over IRA or plan assets, some of these boxes will always be checked. Access to our fixed income desk, access to our IPC. Those are key differentiators and key propositions, or sorry, key value propositions rather, of why it's important and why clients often work with us is again, that intellectual capital that we can bring to the table that differentiates us from a lot of other advisors. So again, we looked at their custodian statement to kind of put together a comparison of where they were at and came up with an ability to say, yes, that was in, will be a more customized set of offering here moving forward. When we come to come to supporting resources, we use the custodian statement for this analysis for this rollover case number 2. And then again, as before, as soon as this case is submitted within Salesforce, this letter will be emailed or mailed to clients. If someone's consented to e-delivery within their advisory agreement, it will be emailed. If we don't have an email address, or if a client has not consented to e-delivery, this will be mailed and your client service team will be helping out with the delivery of that letter. Rollover case number 3. So a current client in this example who may have recently changed jobs and they had an existing 401k plan that they're now looking to roll over and transfer to Buckingham. So let's go over this example next. So again, sample background, we've got a Buckingham client with about $2 million in assets, again, recently switched jobs. The 401k balance had roughly $200,000 in it. And after some initial discussions with the client, we came to the conclusion that we will indeed want to roll this over to Buckingham. This should start feeling familiar, but again, just to go through, since this is a little bit different of where we'll find this information for an actual 401k plan or any qualified plan for that matter, right? We'll need to look at different types of documents like the summary plan description, a plan statement, 404A5 disclosure, Form 5500, some other bits of information to come up with that fee. And so after some analysis and an understanding of this specific example, again, we came in with about a $500 annual fee for this specific 401k plan. That IRA at Buckingham would, just again, in this example, based on our blended rate of where it would come in, be charged about $1,800 on an annual basis. So where's our service offering? Where's our unique ability to provide value for this client? Based on what they currently had in their 401k, they're going to get some additional review of that portfolio allocation on an ongoing basis, some increased flexibility for contributions and withdrawals moving forward. You'll see that a lot in this type of example. Again, we're able to provide our value and click the box yes and proceed from service and features to investment options. And so in this example, since this is already a client, they already had access to the desk and to our IPC, things like that. But their current plan, their current 401k plan, turns out didn't have the greatest evidence-based or passive mutual funds available once our team kind of took a deep dive at some of the documents for that plan, or they didn't have access to the suite of alternative investments we may have had here. So we were able to check those boxes and proceed forward from here. And so again, I mentioned some of the statements we may have used here to come up with that analysis to get information on fees, on the funds within the plan here through some of these different resources that we can get from the clients, which they will likely need to get from their retirement portal, online portal, from their HR benefits team, Again, we know it may take some corralling to get these documents, but it's imperative for our analysis and our research to comply with these rules, that we are getting as much information as we can from these clients before processing the rollover. So similar to before, again, don't want to sound like a broken record, but as soon as that case is submitted, this letter will be teed up and sent to the client. Should start feeling and getting into a pattern as you submit a few of these, of sort of the cadence of how this is going to flow. So just some brief talking points about these letters that I've given to some other advisors. Just again, it's a new process and it's a new client deliverable, so we want to be sensitive to how that looks and feels when a client receives it. And so again, once these cases are submitted, that letter will be kicked off. But in terms of messaging to clients or prospects when they receive this, never a bad idea to front load this to say, hey, this letter is going to be coming once we process this request. But think of it as just, again, we're complying with a new rule for disclosures related to any transfer of retirement assets, and that this letter is going to do a few things. It's going to disclose our fiduciary duty. We've always been a fiduciary to clients. It's going to disclose our compliance with this rule, and it's going to simply document a conversation that likely has already happened in some capacity via email, via discovery meeting, via phone call. Again, this decision to transfer assets of why it's in their best interest. Another way to think of it is another disclosure that's required under either SEC or DOL, much like the Form ADV that's delivered to clients initially, or the Form CRS or our privacy policy. There's no action required from the client for these different transfers that they'll be receiving. So I want to, again, just talk through some of this messaging to clients. I don't want folks to be alarmed when they receive this, and I think advisors can play a hand in softening that message. And like I said, hopefully front loading that messaging back. Case we'll go over here is what's known as an unsolicited decision or client directed for an IRA rollover. And this is a question we're getting a lot from advisors in the field of, hey, compliance, we did a prospect meeting, we did a discovery meeting. We didn't really get into the weeds about their IRA assets or their plan assets. We kind of know they have them, but what's solicited, what's not, where do we draw the line? And I'd say, unfortunately, it's very gray. And so it's very facts and circumstance dependent. We go through an example here that's probably a little bit more black and white of what to be able to look for. But as you're going through these, again, if you listen to the other education here, we recommend really erring on the side of caution and going through and treating this as a solicited decision. Not this specific example, but again, when and if you're faced with that sort of in between or that gray area. The reason being just the cost, the regulatory scrutiny, the fines that could add up as a result of us not following these procedures, in our mind, greatly outweigh the benefit or the time saved, if you think of it that way, from an advisor of not doing and following these protocols. So just wanted to mention that, but we'll go through what may be a black and white example here, just so you can start building some guidance and some expertise here. And so in this case, again, new prospect to BSW looking for a new advisor, want to consolidate their assets. Very, very normal here. Let's say there's one initial kickoff or prospect meeting, very, very high level. Again, don't really get into any of the specifics about the client's accounts, really just talk about Buckingham, a little bit about our value proposition, our background, things of that nature. And client loves it. They want to sign on, they're ready, they've already researched us a little bit, and we sign an agreement, and we're already looking forward to transitioning those assets. It's later discovered under this example that the client has an IRA that will need to be rolled over or transferred. In this situation, again, we didn't do any type of wealth analysis, any type of financial inventory, any type of report, recommendation. Again, put on your advisor hat. I know onboarding looks different for different teams, or prospecting looks different for different teams, but if you're doing any types of those activities, it's likely that there's some level of recommendation that needs to be flagged and needs to be facilitated. If, however, in this case, again, the client was really just sold from the start and we didn't do a deep analysis, this can likely fit as an unsolicited decision, which will remove the need to pull that plan level documentation and to perform a best interest analysis. Wanted to just walk through that example last here. Again, it's a tough one to walk through. Again, we're going to err on the side of caution. We hope advisors aren't abusing this unsolicited option. That's not the intent here, just to be able to allow you to skip through. And we'll be auditing these. We already have been, and some advisors have heard from us to say, hey, look, notice you marked this as unsolicited. Can you please provide compliance with background of why you believe it's unsolicited? And so we're going to be following up. And so again, you've been warned if you think of it that way, that we certainly don't want advisors to abuse this in any way. And then lastly, timeline. So again, as of February 3rd, these new client disclosure letters will be turned on in Salesforce and will begin starting to be delivered to prospects and clients who are part of any rollover cases moving forward. And so questions on all of this, you can email the compliance box. You can email myself. This is Jake Fector. My email is listed on the screen here. We're happy to help walk through these. We know it's additional burden. There will be questions. There will be more training hopefully to come, but hopefully you found that these recordings we're doing now, going through these case studies and some of the lessons learned, to be valuable as you navigate what is a new regulatory law here. Thank you for your time.